been doing, I don't want to be too technical here, but we've had 4 days in a row. We had an inside positive rotation, an outside negative rotation, then an inside positive, and right now a negative outside. That tells me that the market is building up a real head of steam here. And when it breaks out, it's going to be more than just a few hundred points. So,
in which direction? We don't know yet.
Well, we're not entirely sure. Traders were concerned that when they came down today and broke below 26.6, that it might begin to spiral. We didn't get a trapdoor sell-off. In fact, we spent a great deal of the afternoon trading between 26,580 and 26,650. So it's been a narrow band. We're testing that low. As long as we stay within that, the bulls have some hope. If you break down below the earlier lows, we could have a big problem.
Yeah, Grasso, to that point, I mean, you got the S&P on pace to close below the 50-day. The Dow is also in danger of falling below the 50-day. How much of this is technical from your perspective?
Yeah, so for me, there's a retracement level. It's 29.79 in the S&P cash. We're about 30 handles lower than that now. So if you look at the recent highs or all-time highs, then you look at the August lows, you bounce back from there. 29.79 is your first support. So breaking that is a bearish setup going forward. So I'm not happy about it, but I don't think we are doomed unless we start to break down, as Art said, below another 20 handles lower from here. Then I'm going to start to get very concerned.
Arthur, how important are yields for broad sentiment of the indice levels for the equities?
Well, they will be, particularly because they're feeding into the backdrop. As you alluded to earlier, Japan had an absolutely dreadful government auction, and that has sent yields ticking up all around the world, and we would probably be higher in yields except for that dreadful number that we got in the ISM. So things are changing. I would keep my eye on yields. I personally think yields are probably going to go lower here. The foul up on the repos may be a little deeper than people think.
And what is I'm sorry to jump in, but what does that really mean when you start to look at Powell being back in play, where you start to see is what's negative for the market is actually positive when the Powell angle comes back into play. So
unless you think we're heading to a recession that's driven by trade and infecting manufacturing, and low interest rates doesn't help that at all.
But it's driven by trade. If you're a short seller, do you want to get in front of that freight train with possible positive headlines coming out in the next 10, 11, 12 days or so? Even if they're less negative, they're still going to be positive compared to the environment that we're in right now.
Art, the fact that October historically has been, the most volatile month of the year, how does that play into this?
Well, I think the first couple of weeks probably look that they will be volatile. But Brennan, remember one other thing, and that is October's notorious for forming bottoms. And many of the great bottoms we've had come in the month of October. So I'd be very wary of the first 2 weeks and then see what we can build as we start to go out of the month.
Steve, in terms of sector performance at the moment, as we said earlier, the cyclical ones at the bottom, that includes the likes of financials, even though that's not so linked to manufacturing. Is that an opportunity?
So it should be. At face value, it should be. The problem is
about the banks.
The problem is that the XLF, to me, if you look on a long-term chart, there's an extreme double top going back to the financial crisis. It's almost down to the penny. So I need to see it break out of that $31 range in the XLF to really prove the point. Because if you go back there, no one knows better than you. You had less regulation back then, and you had high leverage. You had 30-to-1 leverage. So we have less regulation now, but not to the level we had back then. And we're never going back to 30-to-1 leverage, correct? So why would it be a rosy scenario for the banks?
Arthur, just quickly, we're off the lows as we stand down 260 on the Dow. What are you kind of expecting for the final 50 minutes of trade? Do you think we retest those intraday lows?
Well, I think you might. I think certainly what I want to watch is that band we discussed before. If they can cut the loss and rally back above 26,650, then that will be at least a moral triumph for the bulls. And, they'll say, okay, we escaped without a trapdoor sell-off, and that was very good.
Volumes today?
Volume today, hard to compare because you had the end of quarter, which helped swell the volume a little bit at the close. You had nearly $2 billion to sell on balance late yesterday. So But I would watch. I think the market is going to be looking offshore, particularly at Japan, and what happens in Europe tomorrow.